Bitcoin, below $112,000. Ethereum and Solana are bleeding out. Altcoins are getting absolutely crushed. Just a few weeks ago, the market was celebrating new highs. And now? Fear has returned, and it's returned fast and hard. Today, we're not sugarcoating anything. The crypto market is in pain, but pain often creates the biggest opportunities. In the next few minutes, we'll break down exactly what triggered this sudden crash, what levels to watch for Bitcoin, and which altcoins might actually survive this bloodbath. Stick with me, because how you navigate these next few days could define your entire portfolio for the rest of the year. Let's start with the big picture. Bitcoin has failed to hold the crucial $115,000 support and is now hovering just under $112,000. That might not sound catastrophic at first glance, but this level is psychologically huge. It's a line in the sand that a lot of traders were watching. Once Bitcoin dips below these key zones, the ripple effect spreads across the entire crypto ecosystem like a shock wave. Ethereum is down more than 3%, struggling to hold its own. Solana has lost over 6%, a brutal reminder of its volatility. And XRP is sliding fast too, as the speculative money runs for the exits. This is not an isolated dip. This is a market-wide flush. It's a classic deleveraging event where the weak hands are shaken out, and the question on everyone's mind is, how low can we go? Now, the most important question, why is this happening? It's never just one thing. It's a perfect storm of a few key catalysts. First, macroeconomic tension. The escalating US-China trade standoff has put a damper on risk assets globally. When major world powers are rattling their sabers, investors get nervous and they sell their most volatile assets first. Guess what's at the top of that list? Crypto. Second, liquidity is drying up. The big players, the institutional funds, are stepping aside, and trading volume has thinned out. Think of it like a shallow river versus a deep one. When the water level is low, even a small rock can create huge ripples. That's what's happening now. Every sell order has a much bigger impact, making every dip sharper and more violent. And third, it's a technical breakdown. Once Bitcoin broke that key support level, a chain reaction started. Automated trading algorithms kicked in, and traders who were using leverage got liquidated, forcing more selling. It's a classic feedback loop. Price drops, liquidations happen, which causes more price drops. Fear fuels fear. So, here's what matters right now. These are the key levels to watch for Bitcoin. The $110,000 zone is the immediate floor, the next line of defense. If Bitcoin can find its footing here and consolidate, it may stabilize in the short term. But if it breaks below 110,000, the next major support area sits around $105,000 to $107,000. That's where a lot of long-term buyers might start getting interested. On the upside, the bulls have a tough job ahead. They need to reclaim $115,000 and hold it to shift momentum back in their favor. These levels will dictate whether this is just a healthy dip in a bull market, or the start of a much deeper, more painful correction. Pay close attention to how the price reacts at these specific zones. While Bitcoin is struggling, altcoins are feeling the full force of the storm. This is where the real pain is. Ethereum is down over 3% today, fighting to stay above that crucial $3,800 mark. Solana, down more than 6%, is a textbook example of how high beta assets, the ones that run the hardest, also fall the hardest in downturns, and XRP is also bleeding as speculative interest just evaporates when the market gets scared. Remember this rule. It will save you a lot of heartache. When Bitcoin sneezes, altcoins catch a cold. In some cases, they catch pneumonia. Altcoins are much more volatile and typically lead the downside in sharp corrections because they have less liquidity and are considered higher risk. This is the part of the cycle where quality really starts to matter. This brings us to the most important part. This is where experienced investors separate themselves from emotional ones. During widespread panic, Smart money doesn't chase the drop, and they certainly don't panic sell at the bottom. They analyze, they plan, and they accumulate strategically. They have a shopping list ready for moments just like this. So, what are they looking for? First, coins with real utility and strong active ecosystems. Projects that are actually being used, not just speculated on. Second, they look for projects with healthy cash flow, consistent developer activity, and a clear path toward regulatory clarity. And finally, they look at Bitcoin itself, waiting for it to hit those critical support zones where the long-term risk-to-reward ratio becomes incredibly attractive again. They see fear not as a threat, but as a discount. Here's a practical strategy to keep in mind, one that can help you navigate this chaos without losing your cool. First and foremost, don't FOMO into selling and don't panic. The worst decisions are almost always made when emotions are running high. Let the market find a bottom and stabilize before you make any significant moves. Consider dollar cost averaging, or DCA. This means investing a fixed amount of money at regular intervals. It helps smooth out the volatility and removes the stress of trying to perfectly time the bottom, which is nearly impossible. And most importantly, focus on quality. In a bear market or a serious correction, the projects with weak fundamentals get wiped out. Bitcoin, Ethereum, and other fundamentally strong projects are the most likely to survive and thrive when the market eventually turns around. And finally, keep some liquidity, some cash, on the sidelines. The best buying opportunities usually appear when fear is at its absolute peak. We've seen crashes like this before, and we will see them again. It's the nature of this market. Each and every time, the investors who stay calm, stick to their plan, and act strategically are the ones who end up winning the long game. So here is the big question I want you to ask yourself. Are you reacting emotionally to the red on your screen? Or are you preparing intelligently for the opportunity that this dip presents? If you want daily breakdowns like this, with no hype, just facts and strategy, make sure you hit that subscribe button, turn on notifications, and join our community. The market may be bleeding now, but opportunity is born in chaos. Thanks for watching, and I'll see you in the next video.